This is Intelligent Investing presented by Fidelity Investments. There are two big things impacting stocks this week: earnings and treasury yields. And it's creating a bit of a tug of war for stocks. On Tuesday, the 10-year yield hit 3% for the first time since 2014. Stocks dropped in response to crossing what some investors view as a very important threshold for yields. Rising yields can hurt spending as some consumers and corporations allocate more to repaying debt than they do to spending on other things. Fidelity Director of Global Macro, Jurrien Timmer, says, even with 4.1 more hikes over the next 2 years, a move beyond 3.1 or 3.2% doesn't seem likely, unless the forward curve keeps pricing in more and more hikes, of course, which is always a risk given that Fed dots are suggesting 5 more with upside risk to 6. Tighter financial conditions put pressure on valuations, but strong earnings growth can help offset this impact. I spoke with Timmer 2 weeks ago before the start of earnings season, and he said if earnings stay in the high teens, we could have what he calls a benign valuation reset, where multiples compress but stock prices still rise. Here's what he said he was watching for this earnings season.
So it's interesting because generally the earnings estimates, if you look at the aggregated consensus numbers, they tend to start high and drift lower. I mean, that's sort of been a hallmark of earnings season. But this time around, this will be the first quarter since the corporate tax cut. And the estimate is for 17% year-over-year growth. And that estimate has been rock solid now for probably at least 4 or 5 weeks. So it's really interesting how it has not drifted down. And the same thing is true for Q2, which is pegged at 19% right now. So what I'm looking at for earnings season, which of course is starting now, is A, to see whether the companies will deliver that 17%. And my guess is that they are, because generally, if they're not going to, they will guide lower. You know, nobody likes surprises. But more importantly, will they guide towards the next quarter lower, the same, or higher?
This chart shows how earnings estimates for the last 4 quarters drifted lower in the weeks before the companies reported. But if you look at the Q1 earnings estimate, they were solid and rising in the weeks leading up to this season. And now, a week or so into earnings, that number has jumped up well above 18%. And Q2 earnings estimates have drifted higher and remained solidly at 19%. Timmer says strong earnings can go a long way in offsetting the inevitable tightening of financial conditions that tends to accompany the late cycle. And with the 10-year above 3%, we can use all the help we can get.